What a way to start a week. Now the question is, are we breaking out? Was this a breakaway move, or was it kind of a blow-off move? Are we starting a new intermediate trend, or are we still ending an intermediate trend? So I'm going to break down what the technicals tell us. Some technicals, especially shorter-term technicals, look pretty bullish right now. I'm going to show you which ones. Others might show us that we're a bit mature, and I'm going to show you what I'm talking about there as well, and what does that mean, and what can we expect now going into the end of this week, which is a very important options expiration, and then coming out of that, which in the last presidential election was a pretty bearish period from October's expiration all the way up to the election. So let's go ahead and get started. Today is Monday, October the 12th, 2020. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 with the market forecast indicator. And you can see now we got the dark green shading in the green line. We had enough of a rally today after another gap to the upside. If you saw me on Twitter, I did post this here. Here, let me bring this over. I did post this down here. Let's see, it was this one. Excuse me, that's not the right one. It is this one. This is our sixth opening gap in a row that we've had. We had one of these back in late April too, and a little bit of a pop in volatility afterwards. But that's a lot of gaps here, and you can see we've also had really strong gains today. That was one of the other tweets I posted out. By the time this happened, 4 days in a row of at least 0.88%. That's what we had in these two, a little bit higher than that. So the last time we had that stretch of that big of a gain over 4 days in a row, 4 consecutive days, was back in 2009, April of 2009. We had a little bit of one in June 2011. We came really close. It was a 5-day streak, and one of those days in the middle was at 0.85%. So pretty significant move here. And we talked about in our technical analysis class that we're getting a lot of gaps here. And in my class I did last Friday, we're getting a lot of gaps. And a lot of these are common gaps. And today's move had a little bit, as I mentioned on the Twitter, in my Twitter account again, that a little bit of a parabolic move, especially in the NASDAQ 100. We really kind of went parabolic here. And went dark green shading and green line. Just a really quick reminder, I mentioned this in Friday's video, but technical analysis is one of our 8 classes / trading rooms that we do every week. All of our monthly subscribers get access to that. We're going to give away one free month to our monthly subscription for anybody who's on our mailing list. So if you want to sign up for our mailing list and get in that drawing, just type in right here at the bottom of the Market Outlook. If you're watching us on YouTube, just go to MarketScholars.com, click on Market Outlook here, and it will take you to this page. Just scroll down to the bottom, and you can sign up for our daily Market Outlook email right there. This is what the email looks like that you get from us, which includes time-stamped. These links take you to these time-stamped segments in our Market Outlook video, as well as our overbought and oversold cluster list that we send out on a daily basis. All right, so back to the charts, and you can see now, and the Russell 2000, that was the one that actually had the smallest move today. But keep in mind that it already has made a move. So now the NASDAQ's actually catching up to it, which is rare. Usually the Russell, has been catching up to the NASDAQ, and it's still got a long ways to go. As you can see, it's still the Russell here is still below I'll move this up here to a new high. The NAS, even though it's forming new highs here, it's still below its pre-COVID highs. The NASDAQ is not forming new highs yet, and well above its pre-COVID highs. The S&P 500 also not forming new highs yet either, and you can see also above its pre-COVID highs. Remember, these highs here produce overbought clusters, and that was the last time we kind of went parabolic. And it appears we may be going a little parabolic again right now. The Dow Jones Industrial Average is the laggard now out of all of these, which is interesting because it's got Apple in it, but it's the laggard here. Now that Apple is not as high of a price, it doesn't have as much of a weighting in the Dow Jones Industrial. So not only is it below its pre-COVID highs, like the Russell, unlike the S&P and NASDAQ, it is below this high point, like the S&P and the Nasdaq, but unlike the Russell. So it's really the one laggard we have. It's the Russell had a nice good catch-up move here, and they're all bull. I mean, dark green shading green line is a bullish market forecast pattern. How long it lasts remains to be seen, but now all 4 indexes are showing that. With the Russell still, the Dow's the intermediate line is flirting above market sentiment, but the Russell's the only one that's above its market sentiment line and up in the upper reversal zone. The near-term line is also in the upper reversal zone for all 4 indexes, the blue line, which signifies a strong trend. But again, this is a how many days now? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. The typical near-term run 7 to 12 days. So we are at the far end, long end of a near-term run to get to this point. So now the question is, how long can we go? And we are breaking above the 78% retracement line of this decline, which is a good sign too in terms of popping to the upside. Now you can see the Nasdaq didn't quite get there. It kind of stalled at the 78%, but that's a good sign. The Russell obviously has not only broken above the 78% of this decline, but it's broken through because it's up to new highs. So a good sign for the S&P, and we'll see if that kind of breakout pattern here holds, or whether or not this ends up being a short-term pattern. Alright, before we start looking at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon right here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us there on YouTube. That notifies you when our videos are posted here. Also, while you're down there, hit that thumbs up icon. That tells us 2 things. You liked your video today, and you want us to do another video again tomorrow. Quick way to give us feedback. If you don't like our videos, of course, you don't have to click on anything. But if you do like our videos and you want to let us know, you can do it with one click right now while you're watching. Also, while you're down there, comment. What did you get out of our videos today? What questions or comments do you have? What stood out to you? Post that in the comment section. Join our website at marketscholars.com. There's a link popping out up there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content in between the videos from day to day. And join our Market Outlook Facebook group that we've created. Alright, if you're watching us on YouTube, I invite you to check out some of these other things on our website. Check out some of these other things on the side. Again, our monthly subscribers also get access to our live Market Outlook video. Every day I do the Market Outlook. I also do a live video that same day at 3:30 Eastern Time before the market closes. We look at all the old trade ideas we've been doing in all these previous videos, the ones that we're still in, and we talk about how to manage them, and sometimes we close them, and you can see me talk about that. It's one thing to give you ideas and getting into trades. Everybody does that, but not a lot of people continue to manage those trades and end up closing those trades while you watch the whole time. And that's what I do in these videos. Again, we do these. I do these Mondays, Wednesdays, and Fridays. And then here's all of our other classes. Again, you get access to our classes here on the Trading Rooms link. And then come down here, hit this heart that opens up a new window. Hit that like button right there. Also hit this thumbs up icon. Also opens up a new tab over here. You can come over here and click on this thumbs up as well. Again, the more you do that, it benefits us because our content gets out to all of our followers, not just 120 as you can see here. It benefits you because Facebook and Twitter will promote content in your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us here. All right, let's get back to the charts. Let's look at the weekly Hakinyashi candle. Look at that bullish candle there. That's a strong one. Again, closing above last week's high as of right now, of course. Higher high, higher close, easily a higher close, and then no lower shadow. And we are most likely not going to get a lower shadow this week unless we move all the way down to 33.79. That's 160 some odd points down below. So nice good move to the upside to start us off on what can be a very strong candle this week. Momentum back to being as high as it's been, 6.25 points. Obviously it's been higher before, just to kind of give you some perspective here. We've seen this higher in the past at some of these levels, so it's not like we're extreme, but we are pretty darn strong. It is one of the higher levels we've seen over the past 5 years. if you look at the PPO here, which signals like the 90th percentile. Let's stick with the 1040. And then let's just go back to like the last 5 years here. You can see we are in the 90th, we're in the 95th percentile of the last 20 years. If I go to the last 5 years, we're also about in the 95th percentile. So we're pretty darn strongly bullish from a strong long-term momentum. That's why it's kind of hard to get these kind of moves. Like if you look at other times, we're in the 90th percentile in the last 10 years. If you look at some of these other times, we didn't start new bullish moves from this level, early 2018 or here. We didn't start a new trend. You can see we had some ups and downs before we had a nice little end. And this was right in the middle of QE3, mind you. And then again over here, we didn't start a new bullish move here. We had some bullishness, but it was at the end of a bullish move. So you can almost say again that we are kind of at the end of a long-term bullish move right now, and still haven't really got that 200-day test, the test of the 200-day moving average. That's very typical after a golden crossover. So keep in mind that we could still come down again, not even come down to a 38% retracement. We can come down to the 78% line of this previous decline and break below the 200-day moving average. It's not too often that the 200-day moving average gets this close to the 23% retracement level, but it kind of shows just how bullish we are and how we've lacked the kind of pullback here that may be in the cards here coming soon. So the question is whether or not this is kind of showing us, kind of faking us out and thinking that we're starting a new bullish trend. When you look at this chart and you think it's kind of rare for us to start new bullish trends when the long-term momentum is already this high. In the past, it signaled that more of a pullback was coming, more so than a new trend was starting. Let's take a look at the 3 green arrow chart. That's 3 green arrows first. Obviously, we have 3 green arrows again. So here's our 3 green arrow chart. Not a whole lot of volume on any of these green arrows here. We did finally get a pickup in volume here today. If I take a look at the 2-line versions, the MACD and the stochastic, or the 8 and 17, both have crossed above the 30 now, easily above the 8-day moving average. If you take a look at how high we are above the 8-day moving average right now, to kind of get a sense of our bullishness. 8-day moving average, kind of the really short-term bullishness. And here, let me get rid of the MACD and stochastics for now, so you can see how bullish they are. But here is, where we're at on the 8-day moving average. We're in the 86th percentile, so we're pretty bullish. There's been other instances where we've been higher than this, but even this peak didn't get this far above the 8-day exponential moving average. That's how bullish we are now, and you can see we were a little bit more bullish here in June above the 8-day moving average. We're getting closer and closer to that point again, and of course most of the last year, the most bullish periods we've had was coming off of that low. If I were to go, like, say, to the last 5 years, you can see we are still in the 86th percentile of the last 5 years, but again, you look at just how bullish we are right now, and they give you a sense of it. 2.87 is where we're at here. We're nearly 3% above the 8-day exponential moving average. You can see on all these other periods, we never got that bullish. So again, it kind of shows you that we're still kind of influenced by this decline with the type of rallies that we're getting here. I mean, this is a relative basis down here. It's not like the MACD is absolute value that just gets bigger because we go higher. It's a relative line. You can see even in 10 years, going back to the bounce off of 2011 lows, was the last time we were at least this high point, near 3%, and that was coming off a 7.5% decline below the 8-day, and we're coming off a 10% decline below the 8-day moving average. All right, the nice thing about some of these other oscillators is that they are showing bullish patterns. You're almost back above positive 200. You're back above 60 here. You look at the DMI, you're back above 30. On the DMI positive index, you're well below 20 now on the negative index, even though the ADX is still really low. So we're not. It's not like we're. It's not like this is the end of a trend where the ADX is up at 40, right? You can see. You can get this kind of move when the ADX is low and rising and makes that kind of move. So we'll see if that ends up being the case here or not. Now let's take a look at the intraday moves, the volume, and there's our gaps, right? 4 in a row, boom, 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 boom. 6 in a row if you include these 2 days. These 2 days the gaps got filled. These 4 they haven't at all yet, and even worse on QQQ. I mean, look at that. You know, at one point in time we were way up here, and that's kind of what I was talking about. You know, that's a very poor margin of safety. It's very easy to fill in volume gaps like that. So keep that in mind when we're talking about how bullish things are right now. We kind of went a little parabolic here, and because we went so far so fast, we weren't not able to build up some volume underneath us. We went away from the volume we had underneath us really quickly in 2 days. As fast as we go up, it's just as fast to come down and fill those gaps in. So keep that in mind as we're attempting to be more bullish now because of these kind of breakout patterns we're seeing. You know, again, a lot of these long-term charts are showing us how the strong momentum we have is more indicative of having a long-term run, culminating a long-term bullish move rather than starting a long-term bullish move from here. The other thing too that really stood out today that kind of was an interesting pattern is the volume, or the VIX, excuse me, was up and stayed up. Stayed right around 25. But you remember, we're in the 90% mark, so we're at the, this is bullish territory, mind you, but we're at the least bullish section of it, right near this neutral zone. So for the most part today, the volatility was rising. If you look at the volatility for the NASDAQ, it was, as much as the NASDAQ was up today, the VIX went up. The VIX for the NASDAQ went up at 34, which is much higher than where the VIX is. It just kind of shows, again, how volatile that the VIX is telling us to expect big moves. To the upside or the downside, it doesn't say which. It just says expect big moves. And considering the move that we've had and how easy it would be to have just as big a move to the downside without the volume, you know, that's kind of the volatility is kind of giving us a little cause for concern here. We might have gone just a little too parabolic with today's move. So to summarize my technical outlook, we've had a strong move here and might have been a little too strong, right? We might have gone a little too far, especially on the NASDAQ, too far, too fast. Whether it's anticipation of tomorrow's Apple event or the Amazon Prime Day or just more of this COVID tech play accelerating the work at home, 5G, automated, digital push that we have right now. We really got quite the move in today. So the question is, is that kind of a blow-off type top move, especially with all these unfilled gaps that we've had over the past few days? So some indicators in the shorter term suggest these are, we're breaking out to a new move here. We've got the potential for a new intermediate run to start. The longer term indicators don't, considering how strong momentum currently is, suggest that we're not about to start a more of an intermediate run, that we're closer to the end of one than we are the beginning of one. So what do you think? I think we're actually kind of the latter there more than the former, rather than starting a new intermediate run. We're kind of getting like a fake out type move because of what these long-term indicators are telling us. What do you think? Do you agree with that? Do you disagree? Comment down below, especially if you disagree. What are you seeing that suggests either you're a lot more bullish than I am, or that you're a lot more bearish than I am? Because even if I expect weakness, I don't expect very much, as I showed you before, back down to that 78% retracement line. Maybe you expect more than that. So what do you think and why? Post that down below in the comment section. All right, now let's talk about some of what's driving this price action. Let's take a look at this asset class comparison chart and just take a look at what's happening today. So we'll just go down here to October. You can see over the last 3 months how strong IWM is Well, today it was QQQ's turn to really blow everything else out of the water, up 3%. At one point in time, up over 4% on the day. The S&P was up nearly 2% at one point in time, finished over 1.5. You can see emerging markets did relatively well, better than small cap stocks. Small cap stocks just really struggled to get any traction. At one point in time, when we were up to 4%, small cap stocks were barely positive at all. And you can see with a flat dollar, kind of acting like a strong dollar, pushing gold and commodity prices to the downside. Of course, the big issue, you can see bonds being up here. Long-term bonds were up on the day, on a day where stocks were up too, which is not very typical, but at least they were lagging behind. A lot of it is because of the yields just kind of flattening out here. We've had a strong short-term move. We've got some weakness in the short term. That's brought the near-term line down. Not enough weakness to change the trend yet, and even then it would be light pink shading. But you can see we're kind of stalling here on the 10-year note and potentially reversing things. Remember, the commodities did roll over a little bit today, and even though they have light green shading or dark green shading and the intermediate line's rising, it's still below the market sentiment line, which is falling. And it has some potential to roll over with the near-term line rolling back down below 50. So commodities may be telling us a little something that what we might expect to see with stocks. You can see crude oil also, its intermediate line kind of hitting that market sentiment and appearing to roll over. It's got light pink shading there and a red line. We'll see if it ends up turning into anything more than that. So some weakness in some of these other risk appetite plays that might be showing up a little, showing some weakness eventually in equities as well. If you take a look at the 12 grid chart here, you can see how you have some strong move. Like, look at that strong move higher today in China. Big move to the upside. Not really followed by a strong move anywhere else. You can see lots of dark green shading, but Korea's, in Asia we continue to have the strongest patterns. In China and Europe, for that matter, too. In Canada, we still have yellow lines, so we're strong enough bullish to get up into the 50s and the 60s here, and 70 in Germany with another green line. But not strong enough yet, 54 in Italy, but not strong enough yet to get that moving average turning around. So you can see where the strength is. The strength still continues to lie more in Asia and then in the U.S., followed by Europe, especially in Germany here. All right, now we take a look at how the sectors are performed today, and look at that big bounce back in technology and communication services. Not so much discretionary, lagging behind the market along with the staples and financials there. In fact, pretty much everything else lagging. These were all the leaders, right? We're supposed to be rotating into industrials and financials and energy and materials. You can see kind of behaving like a strong dollar, like we had a strong dollar move today as well. And you can also see utilities and real estate up, but lagging. So really it was a technology and communication services move today, to a smaller degree, consumer discretionary as well. That's your leadership. That has been the leadership. When we're bullish, that will continue to be the leadership going forward. And so anytime we see any of these kind of catch-up trades, especially in utilities and real estate, then we know, I don't know how much I want to put a lot of stock into that type of move. Technology, the problem technology has in terms of getting new highs, and communication services too for that matter, is they had such a parabolic move, and we're kind of getting another parabolic move here, and it's still unable to get to new highs, unlike discretionary, which got the overbought cluster as well over here, and then now is getting up above. In fact, some of these others we're all kind of flirting. The only one that's really strongly above those high point that we had in early September is utilities. Utilities is the only one that's higher than its early September highs. You can see energy is way down from, and everything else is kind of flirting with those highs, whether or not they had a parabolic move up to early September or not. We're all kind of flirting with those highs, except for utilities. So again, that's been the big run here. A lot of these areas, utility, healthcare as well, and financials and industrials has made a move. You can see materials has made a move up to these pre-highs. That's not your typical leadership here. And now we're getting a little bit of a catch-up trade in some of these other areas. That might be the end of this run, right? Where they, this parabolic move turns into something more, whether it ends up being before or after October expiration. You might be a little bit after. We might get some pen risk here as we pull up these indexes up till October expiration, and then once we're through that, then you can kind of see gap filling start to occur after that, where we don't have as much buying anymore, reason to buy anymore, especially if we were to get through this early part of earnings season this week, as well as, like I said, the Apple event and the Amazon event. All right, well, that brings us to our trade idea of the day, and I want to actually go into this financial sector, which you can see has had a pretty decent move here recently with the rise in yields. But a lot of these big banks had a really good move today coming into their earnings season. You can see Goldman Sachs getting up to a higher intermediate line that we've had for a while, getting up above 70. Strong short-term sentiment, a little bit of a breakout type pattern, dark green shading, green line. Take a look at this 3 green arrow chart. You can see a nice little bounce in volume too as well today, up to average with the 3 green arrows. From a 2-line version standpoint, you can see the MACD getting to a higher level than we've seen for a while, stochastics and its moving average in the upper reversal zone. Of course, the RSI and CCI are showing bullish patterns, almost above 200 there, up easily above 60. Which we haven't had for a while. We haven't been up above 60 here for all this other periods except for this one, this kind of catch-up trade that we made back there. And then, of course, the DMI looking pretty positive too, easily getting above 30. We haven't had a trend in a while, so setting up for what could be a kind of a breakout type move, especially with its with being above the cloud, and you can see how flat the cloud is and has been for a while. So you have an opportunity to get this moderate trend going again that we haven't had since, again, that type of catch-up move that we had. So, and if you look at the long-term chart here, you can see we are starting a golden cross. We got one last week and then continuing this week with some good bullish candles. So an opportunity for some bullishness. Again, how long we'll go up, obviously the broader market's got a big say in that. But we do know, even if we do go up, you're going to have some resistance at the top of the value area, and you're going to have the broader market and any weakness that can impact that. And if we go down, we've got some really good support to the downside. And you can see how we got really up, we almost got above the Bollinger Band, upper Bollinger Band today. So that sets us up to say, okay, well, let's take a look at an iron condor trade where I can do both a bullish and a bearish trade. A bull put spread, at 195.90, as you can see down here. So you can see I've already put this on before the market closed. And then a bear call spread at 235.240. That means that we're selling here right at the 20 deltas. You can see right there and also right there, selling at the 20 deltas, buying one strike away for protection. With earnings coming up, you're going to have higher volatility, but the nice thing is that's baked into this purple line. That the probability of expiring includes this earnings announcement. So, and you can see it doesn't make radical moves on earnings here, especially the last time we had it. So we can take advantage of volatility dropping, which is what happens. We know that happens after earnings, and then any kind of move up or down, especially to the downside, we're really protected. And to the upside, we got some resistance as well, and we feel like we can be able to take advantage and get a pretty decent gain out of this. Here, let me get rid of this trade there. About a $500 gain for about a 50% return on risk on a normal position size, even with the earnings, because I feel pretty good about being able to manage the risk once we get through the earnings. I'm not looking for any type of huge breakout moves, really one way or the other, coming out of that event. All right, well, that does it for today. You've heard from me. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That will take you to our Market Outlook forums. All of our subscribers, including our free subscribers, have access to that forum. Remember, the rest of our forums, especially our class forums, are only available for our premium subscribers. But you can be able to participate there with any new threads, with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon on Twitter and Facebook as well, and comment on our video down below. Have a great rest of your Monday night, everybody, and we'll see you all next time.